Good morning. Good morning, everybody. Welcome back to the stream. Today is October 6th, and the stock market is currently in an uptrend. The VIX is actually currently in an uptrend, so that's slightly unusual, not the typical things you see. Good morning, Sam. Bitcoin is obviously doing very well, so we're going to cover the things we normally cover. So we'll get started on a little bit of that when a few more people come strolling in, which I assume they will. But good morning, Sam. Hopefully you had a good weekend. Yeah. Also, Sam, just again, heads up that currently the volatility index is still trending positive. So that's a little dangerous for the market in a way. To be full blown long, you typically would want to see the volatility index also being bearish right now. So again, we got a situation where markets currently are positive, but you kind of have a positive VIX. So we'll take it back to here. Oop. All right, market positive. Market is currently priced at 671.15, sitting right there. Which basically means market is what? It's still above the 50 SMA here, so we would say it's still positive, still in a bullish swing kind of play. But when we bring this down, this is the volatility index. When we bring the volatility index down, we will see that the 30-minute 50 SMA for the VIX priced at $16.38. 1 second. And the 1 hour too is right there, but nonetheless, what's that tell us? That pretty much tells us that the VIX is currently above and trending positive. So typically we don't like to see that. We like to see the VIX be negative, market be positive, vice versa. So it's kind of one of those mornings where you wake up and you scratch your head and go, well, why is the VIX positive? If the VIX positive like this, we're going to be, kind of on head on a swivel type jam. So pretty much the main story always is if the VIX in this instance is over the 50 SMA, it's really got one of two things. There's one of three things, but ultimately things are only going to go up or they're only going to go down, right? So either the VIX is going to take this move over the 50 SMA and it's going to break out, right? And as a result, we'll pull the markets down today. Option number two would be this is a false breakout and the VIX is not going to break out and it's actually going to fall apart and back test its breakout, which would be back down to there. And if that scenario were to play out, then obviously we would continue buying the markets up into a long, most likely. So as the markets on the VIX fail their breakout, come down to said yellow lines, we would take the markets and trade them most likely long bias in that moment, right? Markets end up not breaking down and keep going. We're going to be bearish the market today. All right, so while we look at the VIX, we know the VIX essentially from last night, Friday, and into the after-hour session essentially broke up and through 50 SMA. So it's trying to become a positive trend, trying to be bullish, right? So ultimately, the big picture for me is that it's either the VIX breaks out, we go bearish the market, or the VIX is going to pull back to retest its breakout, and we're going to be long bias the market, right? This is pretty much what we did. What day was that? We did this a couple times. We've done this actually a lot of times this week. This has been a common setup because the VIX is it's not really breaking down nor breaking out, right? So over the past couple weeks, we've had the volatility index like right at the 50 SMA. It broke down here, in which we used the same strategy, right? It broke down and then it back tested, right? Same thing here, broke over, and then obviously it back tested, broke over, back tested, broke over, eventually back tested, broke over, back tested. We broke over again. So again, there's only so many things that can happen. It's, again, if it breaks over like back here, we'll go back to this. Well, you can see it back here in this example, right? It eventually just broke over, and then it finally broke out, and that's where you'd be, pulling the markets back, and then eventually back test. So again, it's a very common thing. So that being said, going into today, that's pretty much what we're looking at for the VIX is breakout, which had already started on Friday. Now we're going to open up. If for whatever reason it wants to launch off, sure, we'll pull the markets back. If not, we're going to pull it back, and then we're going to go long markets. And again, I don't even really know. Hold on, let me double check the economic calendar real quick. Maybe there's something coming up this week that would cause the markets to rise in volatility. So let me see. Jobless claims. Fed minutes on Wednesday, maybe. Minutes of Fed, September, FOMC. We do have that. Tuesday. There is some Fed speak stuff going on this week, along with the FOMC meeting minutes from the Fed. Not actual, and some initial jobless claims on Thursday. But again, it's not like not an FOMC, but maybe that's it. So again, like I said, we've been seeing the VIX stay somewhat, and when I say elevated, it's not really elevated. It's at 16, which is pretty low. Overall, it's not really high. But when I mean elevated, it keeps playing with the idea of breaking out, and it's just not, right? So if you look at what's been going on with the VIX, it's kind of been this like back and forth kind of grind to the upside. And if you look at the market too, the market over the past, we'll call it couple days, last trading sessions, we've had this real kind of yank, push. Oh, sorry. Let me draw it back there. We've had this big pull, push, pull, another push. So we're doing this big kind of, and that's generally, when you're starting to get this kind of awkward market on the VIX where it's breaking out, but not, and then pulling back, breaking out. So whenever you get the markets becoming fearful, any time the market on the VIX tries to get through this 50 SMA, that's the attempt of the markets getting fearful. So if the markets are attempting to become fearful every time we kind of start flipping that 50, you're going to see a market like this where things were going good, and then all of a sudden the VIX starts saying, hey, I'm trying to become fearful, so then the market starts to pull, it starts to slow, right? And then all of a sudden the VIX breaks back down, it's not, and then we launch the market. And then all of a sudden the VIX is back to fearful, and we pull the market. So we're kind of getting this tug on the market into these highs because this VIX keeps sending warning signals, which haven't really panned out. But every time it sends a warning signal, the market says, hold on, right? So that's really what we've been doing this past week, in my opinion, is kind of this slow top based off the warning shots from the VIX that keep coming. Good morning to the few of you guys in here. Good morning. Yeah, so I don't have it on the screen. I think we already did it though, based off of, I haven't even added it, but yeah. So generally we would always look to pull the markets back in the morning to the 30-minute volume weighted average price, which we've already done. So again, from this morning's open, we're pre-market open, then bullish trend takes off, and our first desired pullback on the day would be the volume weighted average price on the 30-minute of this market's long move. So there's the pull back, and it, you know, pulls back again. But just in general, I'm not looking at these two pullbacks. It's just as a whole, right? Market went up and hit a high here. Volume weighted average price is here. Though it might have done this double top whatever with inside of that range, we still just pulled the market back to set prices. So that essentially means the stock market is on its pre-market 30-minute volume weighted average price support over under. If holds above here, then market's just going to kind of keep going up into a long, and then this is also our break spot. I know that sounds kind of dumb, and when I draw it like that, it's not, then it's supposed to look exactly like that, but ultimately we are right on the support over under. So as we said before, what's going to happen is, you know, generally we're going to lean on the VIX here a little bit too. So go back to the VIX right here. All right, so if we take what the VIX looks like, and I'm going to drag this chart over a little bit. All right, so as we said before, right now, chart to the right, SPY, that's pre-market support over under. This is the VIX. VIX broke out last night on Friday. Again, it's going to have to keep breaking out. If it keeps breaking out, then what are we going to do here on the SPY? Obviously, this pre-market 30 minutes going to give up. We're going to take the market down, right? So if SPY breaks out, or sorry, VIX breaks out, runs, we're going to look to roll markets. VIX goes for the back test. We're going to look to pretty much roll the market up long from probably right here, okay? So it's kind of one of those things that we're right on support, so we're not really bearish for the moment. You know, you're right at the support over under, not super bearish. VIX isn't really moving in the immediate. So again, right now the market narrative is the stock market is still in a bullish trend. So the narrative of the market is still bullish overall. The only time we flip bearish is if the VIX starts to break out, which it did Friday. All right, and the market had already pulled back, right? If you look at this pullback, this was the market's pulling back Friday due to this whole entire breakup, right? And then overnight, markets got bought up long because, again, they're still in a long bias swing move, right? And the only way this market kind of fully rolls over again today, right? If we're going to really roll this market over again today, it's going to have to be because this breakout on the VIX is legit. So the VIX broke out Friday and into the after hours, and what happened? That breakout, right, and that long press overnight really did what? It started spooking the market, making the market fearful, all right? But since the market isn't quite negative, it's still positive, it gets bought up still. And now the VIX is going to get that decision to make. Well, if this is legit and you keep breaking out, then yeah, we're going to roll the market again. If this is a false breakout, then the markets are going to press back up into a long, and everybody who went bearish yesterday is going to get probably cooked. Or Friday, sorry. So, I know I'm saying it can go up and down, up and down. That's just how you read the two markets in one. Now, I could simply just sit here and be like, not tell you, could go this way, could go that way. I could just sit here and just do this all day and go, all right, guys, well, you're just going to stay long the entire market until it starts to break down the 50 SMA, right? So that's one way we could do this. I could say less, right? And I would just say, hey, guys, the vertical line is when you started long bias, and then when the VIX goes, or when the market goes below the yellow line, then you can be, you know, then you can flip. But again, we use the VIX as a secondary market to predict essentially how markets are going to move intraday as well. So yes, we could just look at this one trend and tell you that's the trend you stay with, or you can look at both and understand the swing trend, and you can understand when the swing trend might change early and how things are going to move on the intraday, even though it's swing long. So this whole swing long move that we're seeing on the market is great, but we use the VIX to understand when those pullbacks are going to happen within that uptrend, right? And vice versa. If the market was bearish and it was going down, we would then use the VIX for determining where those counter bounces may be, and so on and so forth. So it's just a way to understand how the markets are going to move in more detail. But, yep. Doesn't it? You get better on it. You get better with it over the years. I mean, but again, by no means am I sitting here pressing buttons, 100,000 times a day. Um, I've had the same small little swing long position on the stock market since, I'll show you when. Hold on one second. But I mean, you do raise a good point, which is, yeah, it's hard to talk and trade at the same time, if you will, but talking and walking through markets and teaching it has made me far better at understanding the markets than just sitting there quiet by myself, if you will. So not really. And I would say if you hang out with this for a couple of days, you'll probably see a little of that. But yeah, anyway, so the market turned into a long bias market back here. So essentially back here is when I took small long position on UPRO and been swinging it long ever since. Why? Because the market's positive. So I can sit here and talk pretty easily because this system that I use here too doesn't necessarily change day by day. So some of the things that I'm looking at trading, I mean, this was from last week at this point. But so we're not necessarily looking at hyper scalping every single move of the market, even though we do kind of show how you can do that. So, anyways, just hang out for a couple of days. I think you'll enjoy, and you'll see a good stream, and you'll see some good stuff. But yeah, even my business partner Brandon too. He has said that teaching over the years has made him far better at trading, no doubt. And also, I'll say this too. He may or may not be in the stream still, but I'll say this too. When you already kind of have systems in place and things that you use, it's more or less just kind of waiting for those things to happen as opposed to seeking and trying to find. So as far as talking, I mean, it's a rinse and repeat system almost every single day in the market for me at this point. So it's not like any of the things that I'm looking at are things that I'm trying to learn or trying to find or whatnot. They're there every single day. So here's one of them. But yeah, I mean my logical history or mythological history. This is one of them. So this 30-minute VWAP here, this pretty much happens every single day. Whether the market goes up or the market goes down, the pre-market almost always at some point, whether in the pre-market or going into the early morning session, will retrace the 30-minute volume weighted average price of the pre-market. So that is sort of a pullback trade that we can look for almost every single day. It's also a level, like right now, volume weighted average price, an area where you can look for a long trade. Well, in this case, long because market's up. So this would be pullback to support long. So you get to do a counter, which is harder, and then or a dip buy, etc. for a trade there. So that's kind of a little intraday trade setup that takes place, I would say, nearly almost every single day. Even back here on this day, 30-minute VWAP off highs. We use it on a Friday stream. So this would be, put it to the high here. So essentially going into the open, I'll move this level. Yeah, going into the open, we said the 30-minute volume weighted average price for the day has not been tested. So we're going to look to take the markets long to start the day on this downward move back to the volume weighted average price first. So it's kind of a smaller, I mean, it's just a strategy that pretty much takes place almost every single day. So it's not something I have to go search to find or look for. It's just going to be there pretty much every day. Yeah. Where is, hold up. VIX. Where did my VIX chart go? That's weird. Why is it doing that? Oh, it's right here. Yeah, we got quite a bit of time. It's a little casual Monday morning. But yeah, my mythological history. Yeah, I mean, this is, even for you, I mean, this is 100% the easiest strategy that you can have on planet Earth for the stock market, in my opinion. It will keep you on the right side of the market pretty much every single day. Well, it's not entirely true, but it'll keep you on the right side of the market more so than 95% of everyone on the internet. Everyone streaming on YouTube, CNBC, Fox News, CNN, blah, blah, blah. You'll be right about the market before all of them every single time. It's, again, you just use a 30-minute time frame. You turn off your pre-market, turn off your after-hours trading, so your chart you'll see more gaps in the chart, kind of like this, because it's only calculating from the close of yesterday to the open of today, or close of Friday to open of Monday. So any of the weekend action, any of the pre-market, early hours, after hours, it doesn't get included into the price. Not that we don't use those charts, but the SMA calculation that you're looking for is priced or comes from this chart function. No pre-market, it's a regular trading hours. So the SMA calculation is only calculating the highest volume trading part of the day, which is the live trading hours. But anyways, that is it. 30-minute time frame, 50 SMA, open, high, low, close trading chart function. Whenever the market is transitioning over, you get long the market. If we start to transition below, if we start to transition below, you close your long if you have any left on still. You go neutral, or you could try to be aggressive and you can try to short the market. Though we know that over the long term, the stock markets naturally go up. So just in general, anytime you're ever shorting the market, it would always be against the historical longer term trend of the market, meaning shorts won't last as long as longs last, typically. But anyways, all right, and then if market transitions back over the 50, you're in a long bias market, right? And then you'd be back to neutral, then back to long, right? So if you follow that through and throughout, you will stay on the right side of the market almost every single time. You will know when the news is going to transition from bullish to bearish, because the news just follows what the market does. So if you know when the market is going to transition bullish, you could predict a day ahead of time how the markets are going to change, right? So like back here, markets are bearish, and then we see the market pop up and it gets close to the 50 SMA. So we know if in the event it transitions over the next day, we go into a bull market, arguably, then we know that right there is where the news will change from bearish to bullish. So the same system we use to dictate how markets transition from bullish to bearish is the same level that pretty much dictates how the psychological news headlines are going to change in the market, because generally speaking, the people that write news only know how to attach market action to something that's currently going on in the world. Therefore, if they see prices are going down, then they're just going to write about prices going down. And if today prices are going down and they heard Jerome Powell speak, then they're going to say it must be his fault, but not the fact the markets are just going through their natural ebb and flow of uptrend, downtrend. And your news cycles are just late, as always, and they're just reporting on whatever they think they can find that makes sense, or that they could sell to the public, that the public would think makes sense. And that's how the system operates. Whether intentionally or unintentionally, again, I don't really care, but that is how it works, unfortunately. Fortunately and unfortunately. So we'll go back to the SPY. So again, right now, SPY just pretty much sitting, coming up off of its 30-minute pre-market support over under as suggested, I don't know, pretty much whatever time we got in the stream. I don't really remember. It was about 9 o'clock, but again, that yellow line that's on the screen, that is our pre-market 30-minute volume-weighted average price support over under. So I'll put that on the screen, pre-market 30-minute support. Pre-market 30-minute support over under right there. Pretty much, unless we're below that, the pre-market volume does not get taken out. And if we're above it, then we and that might not be the best way of saying it, but it's just bullish, bearish, right? If we're above, bullish, right? When we get below, maybe it flips bearish. So hopefully some of you guys on the stream took the recommendation and you would be watching long at the 30-minute support over under. Oh, so that's another thing too that I didn't really mention. I think about how big these drops are. Drop. Do you really think it's supposed to get to the VWAP and then just go down, right? Or and then it bounces up and then it goes straight down back towards that VWAP? Is it really supposed to just break and go, right? Or does it bounce? You know what I mean? So some things to think about, just the way price action arrives at certain levels. Got about 50 seconds till the day starts here, or well, day starts or till market open. Again, like I said, whenever the market is getting ready to open, the number one thing I do is I look at the market internal. So I look behind the scenes and see what's moving in the market, or where the markets and what markets are moving. So we'll determine if things are going to be bullish or bearish out of the gates by looking at pretty much everything that's moving in the market behind the scenes. I will try to keep, maybe I can keep this on the same chart. Hold on, if I make this, 1 second. I'm try to bring the market internals over. That's a little better. Oh, but then I can't. That's good. I'm gonna shrink these a little bit. You might not be able to see those great, but you know. All right, so far the first 1 minute's bearish with with pretty much your entire major market cap stocks dropping. You can see that right there, first 1 minute. So that's why the market gets yanked. All of our big market cap stocks are pulling to start in the morning. NASDAQ 100 pull, NASDAQ 100, New York Stock Exchange pulling, red, red, red. So first 1 minute, obviously red of the day. There is, everything is moving red to start. Doesn't mean that we'll continue that way, but there's nothing moving positive right now in the market from the open. Next is going to be seeing that VIX. Assuming with the start of the red, we'll see. It depends on when the VIX is going to open here. We're still waiting on that. All right, volatility index open. Yay. Actually. All right, I'm just going to make sure everyone's aware of today's narrative. What's the narrative? Today's narrative is stock market is still what? Stock market is still in a macro swing long. It's still in a overall bullish market. We're just using the volatility index right now and the market internals to determine short-term price action movement within the greater macro long. All right. Right now, the volatility index is positive, which makes the markets a little skeptical. All right. So we're leaning on the VIX this morning. Now let me double check a couple of the things. That's a breakup. VIX is just weird. 10 minutes. All right, still really nothing moving positive in the market. Most stuff is selling for the time being. Again, that means you're not in the immediate watching things totally long bias. So if you've been trying to buy things long, you've been pretty much getting sold into for the moment. What we're going to need to see is some sort of positive movement come into these equity markets, arguably into the FANG, MAG 7. MAG 7's this middle one, but again, you can look, you can see. I mean, it might be hard to see on your screens, but I'll try to zoom in some. These are just the advancing declining issues of the market. They're all red. The only thing that's kind of got some green on it right now are these FANG. So, and that's usually the case. Usually we need the FANG to trade well for the markets to trade well, so that's kind of always a thing. Again, really nothing moving positive. Again, so in the moments, like this exact moment, we're not extremely long because there's just really nothing moving long. Also, when we look at the volatility index, oh, hold on, let me try to, yeah. When we look at the volatility index, what do we know? We know that the volatility index is positive. So I myself, along with others, are a little skeptical, slightly fearful. Like, why is the VIX breaking up? Why is it over the 50 SMA, etc.? Is that an early sign that though the market isn't, the market itself, the SPY, isn't negative, should we be looking to change that, right? So that's whenever we start breaking out the VIX, kind of like we're doing, that always becomes a question, right? Remember, the breakout was the yellow lines yesterday. So there's only one or two things that really happen when a breakout on the VIX happens. Either the market actually breaks out and we throw the markets down, or we eventually go to back test. So that's pretty much what's going on. That's it. Either the VIX is actually breaking out, or we're going to back test all the way down to like 1640s or so. That doesn't always happen that way. We've done that so many times this past couple of weeks that I wouldn't be surprised if that fails. But anyways, for the moment, VIX is positive. Markets are positive, but the market internals are bearish. So again, in the immediate, you're not long biased the market on this trading day yet. We hit the pre-market supports. We've bounced all that. That's good. Right now, the SPY is on the pre-market support over under. So again, this is where everyone that's been trading the markets long from pre-market are now pretty much on their stop out, right? And when I say that, it's because we know most people didn't buy the pre-market low. Most people were probably trading somewhere in this high, so now they've just stopped out. All right, that's what we talked about. That's the pre-market support over under. When we trade into it for the first time in the morning, you can look to bounce it. If you later fall below it, that's your breakdown. So now again, you're just kind of stopping people out. Markets are bearish. Nasdaq's moving bearish. Nasdaq 100's bearish. New York Stock Exchange bearish. S&P 500 bearish. The only thing that's actually not super bearish are the Magnificent Seven, which is kind of weird. But that tells us that just all the selling pressure amongst all the markets is strong enough that even with the Mag 7 not totally selling off, doesn't matter. Markets are pulling a little bit. All right, so that is something to watch, is those Mag 7. If they start to hold and turn positive, maybe it will prevent a catastrophic sell-off, but so far things look pretty shitty. Again, VIX is moving in a positive manner. Most of the stocks are bearish here. All right, now that we got a couple minutes of trading under our belt, we're going to go into the 1 minute chart here on the SPY, and we're going to start looking at some 1 minute volume weighted average price levels. So these are going to be more of like scalping levels. These are for short-term trading particularly. So we have the high a day untested, then you have the roll here, and then the breakdown. So pretty much the counter trade right now would arguably be back to this box that I'm drawing on the screen right there. So markets can pop back to about there, so that would be long counter scalp, and then this would be markets remain bearish below here for the moment. So we'd only kind of flip bullish if above. So we're still counter pop here and then bearish below, especially while the market internals still look terrible. They're actually getting worse is the way it looks. So I'm actually kind of surprised that the QQQ has a couple green candles right now, even though things are getting worse there. It's kind of weird. That is not typical. Oh, yeah, let me delete these random drawings off the screen. They're kind of ugly, but you guys get the point. You know, for those of you that watch my stream, which is only a few right now, you guys know if I draw a box on the screen, that pretty much means it's a targetable area that we're most likely going to go to. So there would be our counter trend, 1 minute scalpable retrace target zone complete. That's done. We essentially just retrace the volume weighted average price of the previous sellers in the market. So everyone that sold the last leg down, 1, 2, 3, 4 minutes down. Volume weighted average price for those two blue lines. That's why we took the market, popped it up back into here, so we could take everyone that was just selling the market in the micro and piss them off. So that trade is done. So again, that trade idea is now complete. Done. Again, markets are just, in my opinion, they're not extremely bullish right now, because when I look at the market internals, there's really nothing. I mean, like I said, what's the only hope here is like the Mag 7, the Fang, right? These ones are the only ones that haven't broken down and kind of started truly selling off on the day. So that's where our hope is at, that those somehow hold up, get bought, and then the market. And when I say that's the hope, that's just the hope for kind of the generalization of the market, right? We always hope the market goes up. Why? Because if the market goes up, everyone that has a retirement plan generally does better. So that means your fellow friends, your fellow neighbors, your parents, your grandparents, pretty much anyone you know that has any sort of investment, generally speaking, that is better for them if the market is going up. It's better for the economy, it's better for the world, it's better for just pretty much everything. So we naturally always want the markets to go up. So when we say the best thing that can happen for the market is always going up. So the best thing that can always happen in any given situation for the day is that things go up. So the best case for the markets today would be that the FANG hold and start to get bought up, and that would prevent maybe the markets from further selling. Granted, that's irrelevant for day trading and intraday momentum. What the intraday momentum is suggesting is that things are bearish, right? But the best thing for the market, the hopeful thing for the economy, the hopeful thing for all of our retirements is that the Mag 7 stops selling off. That could prevent a catastrophic sell off today, but that's not happening. It's just still bearish, right? So again, ladies and gentlemen, that's how you use market internals. That's how you look at the volatility index and the market to understand how the markets are going to trade in real time with essentially conviction and not really questioning. You don't have to question something when you can see it with your eyes, right? So we're not looking necessarily at the patterns in the market. Well, does this look bearish? Is this pattern bearish? No, the markets are bearish. That's what it is. NASDAQ is down. NASDAQ 100 down. S&P down. New York Stock Exchange down. Volume of the market down. Magnificent 7 ticker down, right? But here you are trying to buy longs. Doesn't make sense. You're looking at the volatility index. The fear has broken out on Friday. Fear broke out Friday, so there's fear in the markets right now. So you're trying to buy extremely long buys the market. While there's fear, the fear in the markets increased from Friday, and the markets are entirely trading red for the moment, right? Which could obviously change, but it's just not what you do. All right, our 1 minute counter long target, lower high start level complete, which I'm a little late to this. We're just doing a counter pop back to the 1 minute volume weighted average price defined by the last lower high. So if we put that box there, that's where that candle's going. Well, it already did, obviously. I was kind of late to that one, but again, there's this strategy repeats so frequently that if I miss one, I don't even care. When you're using 1 minute volume weighted average prices on previous price action, you're going to see maybe you'll generally you could get 20 trades a day, 30 trades within that system because it's such a high frequency sort of repeating thing. But anyways, so you'll see that repeat so frequently it doesn't even matter. So we'll start re-anchoring there too. Again, guys, we're just watching markets down for the time being because of intraday momentum on all the markets is bearish. The volatility index is breaking out. So we do have an S&P 500 that still has a positive trend to it, but there's other factors in the market that are moving against that today, which again are a positive VIX and a so far very bearish intraday momentum on market internals. Oof. Well, not really oof, but again, guys, pretty straightforward. Again, market internals are bearish, and now the Mag 7 actually just broke down below their current intraday support on their Magnificent 7 ticker. So you see that big red candle there, that last big one. That was the first kind of decent red candle. Well, I don't say decent, but that was the newest kind of bigger red candle we saw flash on the market internal. Anyway, basic stuff. Basic stuff. Just bearish market. Good morning, Rico. Welcome for tuning back in. Welcome for tuning back in. Yeah, that makes a lot of sense. Thanks for coming back, if you will. Again, we're just watching markets on the intraday bearish. Again, if you're trading, should be trading in the bearish direction, generally speaking. Why? Because the entire market's bearish. Pretty straightforward. No questions. Well, that would have been a green candle, so right now. Sorry guys, I'm just updating here. That's where our counter level's at for the moment. So if the market starts to pop up a little bit here, we wouldn't be looking for the market to go any higher than there, because that would be where a new 1 minute bearish roll could arguably start. So if there's any counter pop, that's the maximum for the moment. Not that it couldn't go higher, but as far as the 1 minute chart, we just don't look for it to go more than that. So that's our counter pop level, which pretty much completed. So now we'll be looking back to bearish because the 1 minute micro is done, etc. We'll transition back on the micro stuff. We'd only really like maybe pop super bullish if we get above there, right? So far the market internals are pretty, and you can see right now, like, we're starting to get a little long off the bottom of some stuff. A little green candle on the FANG there. Like some little green stuff. So that's arguably why we're able to pop that right there. But, yeah. I mean, overall the trend on the days for market internals is still a little lackluster. We have no higher low development on this chart. There's nothing that really signals for the markets to be long bias other than just the need to do a retrace, right? There's a little bit of green on some of those market internals, but anyway, so that's the counter pop right now, and then we'll see if the market remains bearish below these VWAPs or not. If not, then it's just going to go up to the next volume zone, right? So again, guys, right there, that's that. Well, this would be the zone right there. Well, that's untested too. So really the zone is to here. Yep. And then the next previous zone would be right there. And then the all-time, and then the daily one, which is untested, would be here. So in the event we do some wicked reversal, which I just don't really see for the moment, because there's not enough. Well, there's a little bullishness in the market internals, but not quite enough. But we'll see. So there would be the counter pop level completing from the low side of the box to the high side of the box. So that target retrace is done. Now we'll see if any resistance is found here. And that's what would be needed to keep this market kind of trending down on the intraday. All right. If we continue to run up, then the next target's going to be that box there. And then the following would be that box there. So those are going to be the two next targets up for the market, obviously, if it continues higher. Which kind of sounds dumb when you say it, because obviously if the market's going to go up, then obviously it's going to hit anything you place above it and so on and so forth, right? But so this is where we're at right now. See if we work another lower high or not. Good to be back. Good to be back. Happy to have you. The stream is blowing up here today, folks. Absolutely blowing up. We got 5 people in here. Let's go. We are absolutely skilling it. Oh no, like honestly, I'm actually very happy doing this on YouTube. I've actually say I've probably been a little bit, probably more happy over the past few weeks, just kind of working on YouTube, doing the jam here. It's been fun actually. I've been enjoying it. Yeah, no, I mean this is a brand new channel. For algorithms to even remotely work in your favor, you got to be super consistent for a decent amount of time before the computer would even try to work that way. But it is fun. Again, we do got a little bit of bouncing going on in the Fang, but there's not even a positive MAC cross. So far we're just pretty much using, right now you can see the Fang have had 1, 2, 3, 4, 5, 6, 7, 7 green candles in a row. That's arguably what's helping prevent the market from selling off right now. So we're essentially bouncing the market using the Fang. You can see how the Fang are staying green. While that's taking place, the markets are not going to go down, generally speaking. Yeah, I'm kind of taking a second now, strolling through a few of the penny stocks, seeing which ones I might like that look kind of interesting. Yeah, this morning there wasn't really any penny stocks at the time that were breaking out of key levels I could use for the moment. Just really weren't there. And there's our market just kind of rolling over again. Not really a surprise. Most of the market's entirely bearish. We had a momentary bounce there with a little bit of the Mag 7. Volatility index is still upwards, still breaking out, right? So what's that going to do for the market? It's going to increase fear in the market, and we're going to pull the markets back, and we're not going to trade bullish. Very, very simple tingies. Simple tingy wingies. Mythological history. I hope you're still in here. I hope you hung around for a little bit to see how we pretty much just use basic volume weighted average prices to predict every single counter pop on the market so far today, and then where resistance would be after that. That was pretty good stuff. But yeah, anyways, I'm just going to kind of be semi-quiet here. I'm going to look through some penny stocks, see if there's anything I want to buy here on this day. There's only one that I bought, which was, what is it, STEX. Took a long on STEX a little bit ago. That one, to me, seemed decent, like it would have some momentum to the upside. So far, correct on that, and that is in no means a suggestion. I'll just kind of walk through this one real quick, and why I thought it was decent. What the heck was that? Oh, I see. I see. That does not make. I'm so. Oh, I see what I'm doing. Like, what the hell? Anyways. Alright, so we'll run through this one briefly. but I still need to look. So actually, hold on. Before I say anything, I want to keep looking because I always do that. I kind of get sidetracked. ONMED. NMTC, that. That's not even loading. Computer's being weird, not loading right now, so I'll hold off on that. But yeah, so this one, STEX today started popping up a little bit. It's pretty straightforward, right? It's on the biggest gainers list. It's obviously positive. Anything that's on the biggest gainers list is almost always positive and almost always in an uptrend, generally speaking. So this one today started a 30-minute uptrend at 557. And then if we look at the daily chart, so I see on the daily chart too, I just happened to look at this. So this was up. It back tested the daily and now breaks. So that's basically a daily higher low. So we coming out of a daily higher low. It also had a 30-minute breakup overnight, and then obviously this probably means the 4-hour would be positive. So if we look at the 4-hour just got positive here. So ultimately, you have a daily higher low on this stock that just took place, and where's my pre-market chart? Oh, here it is. 5 minutes. And we know that it started a 30-minute uptrend and a 4-hour uptrend today alone. So we essentially came off of daily 50 SMA support, break over 30-minute, turn 30-minute positive, breakout 4-hour. So all the important uptrends I would look for essentially started today right there at the open. So not that it couldn't pull back. I just assumed there's decent momentum. So I had a little position on that. And I'm actually already exited that position. I sold just a few minutes ago. Not that it's not going to go higher. Not that I think it's going to pull back. But I just made a profitable trade on a stock that had momentum to the upside. And that's it. But just wanted to cover this stock because why not? It's pretty decent as far as something that could have favorable upside. And I'm not looking at any of the, I'm just simply looking at where uptrend arguably could have started and just kind of the way the chart looked, right? So anyways, that one was that. Enough of that. But yeah, I don't have a position on it anymore. Again, I usually don't stay, not that I don't stay too long on penny stock. Sometimes I'll just put a stop and hold it. But yeah, anyways, so that one was decent. And now I'm just kind of looking through and see if there's anything else right now that kind of looks decent that might have some decent movement. But I haven't really, well, I don't know, I'm not coming across anything that I think is great so far. Yeah, mortgages going down. Again, there's really, it's like sometimes I wish I had more to say, but again, there's really not. I mean, it's just a bearish day. We're just using volume weighted average, again, like right there. Not that I didn't do it, but you guys could have seen, I could have easily took the VWAP. We would have anchored that high and was, hey guys, here's going to be your counter pop to right about there, and then you're going to look for bearish momentum below because that's the VWAP and down. So that essentially means we're going to take this volume weighted average price, we're going to move it here, and we're going to take another view, and we're going to move it there. And now our new counter pop level is this box I'm putting on the screen right there. So as long as the market maintains below that little box there on the screen, then the 1 minute volume weighted average price trend is intact and just down. So I'll just draw it on the screen. It's always easier for me just to draw on the screen because, so essentially as long as the market does this, stays below there, it's down. Right, so anything in between pop up, it's still down. Right, only above what we think maybe the 1 minute chart is changing. Right, so it's like that now. We get back to just kind of going through some of these penny stocks. Little pennies. Again, volatility index still trending up and out. As a result, the markets are not gonna, well, not really, but just, again, VIX is just trending up. So volatility and fear are increasing. Therefore, markets are pulling back. I'm sure, actually, I wonder what the news is saying. I'm kind of curious, but Because, I guess if I was to write the headlines for the news, it would be, I would say if I were writing news headlines and articles for like CNBC or something, my article today would be the volatility index started breaking out on Friday and in the early after hour session of Friday last week, which means fear is increasing in the market. Generally, when fear increases in the markets pull back. So to all of my CNBC listeners and viewers and readers this morning, going into Monday morning, if the fear index stays positive, then we'll most likely look to pull the markets back. But as we go into the open, we have to confirm that by looking at the market internals for the stock market to see if things truly are selling off. So far, that's happened today. Markets are going down. So the main headline would really just be, hey everyone, watch out, volatility and fear are increasing. Generally when that happens, we pull the market back. So let's see what the news looks like today. News today. Oh, that's not going to work. Stock market news today. So here, guys, look at this. CNBC, 8 minutes ago. S&P 5, how is that even possible from 8 minutes ago? S&P 500 rises to kick off new week after big bank deal, AMD OpenAI partnership. Wow. So CNBC thinks that the S&P 500 is rising. Well, granted, if you look at from maybe where the close was, yeah, I guess you would say that it is rising, but not really. We're bearish today, actually, CNBC. So the S&P 500 apparently is rising, even though all morning we've been selling off, and that was posted 8 minutes ago. That guy should be fired. Or girl. Market watch. Stock market today. S&P 500 head for longest winning streak since May. Even though today's bearish. Whoever wrote that should be fired. Stock market today. NASDAQ leads Dow. S&P 500 higher as AMD surges. Yahoo Finance is wrong. CNBC is wrong. Market watch is wrong. Stock market today. Dow, NASDAQ open higher. Well, they did, but now they're not. So that's pretty misleading because if I was a new retail investor, I'd surely come in and I'd look at Yahoo Finance and CNBC and MarketWatch and all these very famous companies, and I would read these headlines and I would assume that the markets are bullish. And then I'd come and look at my portfolio and go, oh my gosh, I'm getting whacked. And then that's when I would go to YouTube and go, what network should I really listen to? And I was like, and that's when I found Boiler Room Network. And that's when I realized that was my network that I like to listen to. Because he came in today and he told me exactly why the markets were trading bearish, even though every single major news outlet told me it was bullish. That's my network. That's the one I like. Stock market today, Dow and S&P 500 NASDAQ futures rise as government shutdown drags on. I thought we were rising. Actually, we're getting cooked. Reuters, global stocks steady, even as political upheaval dominates markets. The only thing getting dominated is you, Reuters. So there's your, there's our little news TED Talk. We do that. You guys know that we do that. But if there's anyone new here, which maybe there is, we typically run through the news, once a day sometimes, just to see, sometimes a few times a week, just to see how generally wrong the news cycle is, and how late. And sure enough, they are. Anyways, ladies and gentlemen, as you guys can see, there's our 1 minute retrace to the volume weighted average price and then down. So let's just move this little guy. So the box is obviously updated down. So right about there. So cheers. We will continue on. Our next 1 minute volume weighted average price anchor is there. So now that tells us that the 1 minute chart is still bearish as long as it's below that 1 minute volume weighted average price. And that's also a generalization statement. Like obviously it could pop above and then still go down, but just generalization stuff. So, yep, VIX is still breaking out. So markets are still pulling. Actually, I am quite surprised right now that somehow, let me double check. The Nasdaq I actually haven't had that up, so that one's probably. Yeah, we got a little. I was gonna say we got a little divergence in the market. Let me show you real quick because I'm looking at the FANG or the Magnificent Seven, Mag Seven, and they're actually doing well. But everything else, for the most part, is down. Right? Volume in the market's down. S&P down. Nasdaq down. Nasdaq 100 down. Just some FANG moving. Now that being said, when the FANGs start to run positive, or the Mag 7, generally markets do bottom. So we could be getting to a point where the market's almost done here. And the reason I'm saying that is just because of this guy here. I mean, there's so much positive movement on the Mag 7 that it's like eventually you would assume this selling kind of slows. But anyways, something else I should take a peek at, which is our 30-minute chart here to make sure we're not coming into any 30-minute supports that I was missing. Which it looks like we are. Or close to. Let me just see. Yep. So there's our 30-minute volume weighted average price, support over under on the regular trading hours. So extended trading hours. So yeah, pretty much as we come into here, this is a 30-minute VWAP over under support too. Which I kind of didn't really realize till like just now because I just wasn't really thinking about it. 30. It's always there. It's always a part of strategy, but it's just back in my 30-minute view app support over under. All right. But yeah, so this is where I'm at right now as far as intraday stuff is that I'm a little less bearish now just because of how big the FANG is rolling up here. And you can see if you go look at QQQ, so you'll see real quick. If you go look at QQQ, look at QQQ, right? QQQ is rolling up, right? And why is that? Because the Mag 7 are pretty much rolling up, right? But if you go look at the SPY, you're going to see the SPY is mainly down. Why would that be? And that would be because if you look at the market internals for everything else is pretty much down. The only thing that was kind of moving positive, again, are some of that NASDAQ, some of that FANG. S&P down, and NYSE down, NASDAQ 100. But you're starting to see a little bit of positive movement, which would affect the QQQ faster than that of the SPY, but regardless. Again, we still have an increasing volatility index, so it's kind of an interesting market. Actually, one second. Let me look at something else here, too. We gotta look at SPX. Below the 5-minute. Oh, I don't have a 10. How about the 15? Below the 15. Yikesies. Yikes. I mean, yeah, overall market's still positive. You can't deny that. The worst thing for the market. Remember the one when we say for the market. So in this case, the worst thing for everyone's 401ks today would be the market's going lower, right? One of the ways that that could very well happen is if this bounce on the Mag 7 gives up and then obviously flips back to bearish, that could allow the markets to continue selling off the low, right? So SPY, right, if we go look at SPY, SPY is still hanging on the downside. Yikes. Let's get back to this guy. So SPY, right, still on the downside. Yes, the QQQ's bounced a little bit, but ultimately, if that bounce on the Mag 7 goes back down, then we're going to see continued selling, blah, blah, blah. But again, like I said, we're coming into the 30-minute VWAP support over under, so really wouldn't be surprised if some of the selling slows down here as we come into that VWAP. We haven't hit it yet. We came close to it there, so this is one of those, the market's going to probably take that low out and then sell right down into 66939. That's a lot of times a pattern we'll see. So, you know, someone's thinking like this is going to double bottom, right? And then they buy and then it just drops out to there, right? So that's something I could foresee happening. Extended hours. What am I doing? Hold on. Oh yeah, SPY, regular trading hours, 30 minute, 50 is all the way down there. But yeah, the worst case for the market would obviously be to keep selling down. So the last thing people want is those Mag 7 to keep selling, because if they do, it's not gonna help the bounce or anything on the SPY, for that matter. Also, we just flipped, looks like the 15-minute chart negative. So right now we've gone into a downtrend on the 15-minute S&P chart. So that means a successful downtrend on the 15 takes the SPY and SPX down to its 50 SMA. So if we're looking at SPX, the sell target would now become 6,706 for a successful 15-minute downtrend. And so that means the back test is now to here. So as we look at the 15-minute chart, we know the 15-minute broke down. Therefore, our back test on the 15 is back to 6,724, or the market goes down to the 30-minute. So in my eyes, there's only two options now for the S&P market as I look at some of these SMA levels. Knowing that we just broke down the 15-minute, when we break down the 15-minute and we successfully sell off, the market would go and then go to the 30-minute. If the 15-minute does not successfully sell off to the 30-minute, then what's it going to do? It's going to back test its breakdown, right? So if the 15, just like we say with the VIX, right? If the VIX is going to break out and go, then great. If not, it's going to back test. Same story here. 15-minute on the market broke down. If it's not going to essentially break down and just trend out to its next target down, it's going to bounce and it's going to back test. So that back test would be like 620, 6724 something. I don't know. Let me go to the other chart here. So SPY just broke down its 15-minute here, which is there. Let me double check these. That is a 10. Yeah, so that would basically mean the SPY is going to bounce back towards probably 669.90, right? So 669.90 would be here, so arguably this double bot, any of this bouncing down here has room towards like arguably 669.90, right? So we're pretty much completing that like now. There it goes, done. There's our 15-minute back test complete. How do we know that was going to happen? It's pretty basic. Things go up and things go down. Levels break, and when they break out and break down, they have to keep going. They're going to back test. All right, so there's our bounce at the low after pretty much getting the 30-minute VWAP support over under. Actually kind of shied it. They did do that little double bottom breakdown pretty much. So there's our 30-minute VWAP support over under as market sells down into. As we said, we're less bearish down here because 30-minute VWAP support, and arguably because the bounce on some of the FANG and blah, blah, blah. Anyways, good stuff. Hopefully that makes sense. I'm going to clean this chart up a little bit. Hopefully some of you guys got in a little bit on the old bouncer Magooster McGee, but you know. Back to the old 10 SMA there too. Breakdown back to coup. Done. I'm going to go to the 1 minute. I don't think we retraced the 1 minute yet, top down. Let's see if we hit that here, because if so, could still be a nice resistance. I don't think we did if that's hitting, so let's see. Nope, has not hit yet. Let's see, what about this guy? Nope. Nope, so yeah, arguably this bounce may even get up to about there. That guy there, and then this one here. Yeah, I mean, realistically, this bounce anywhere into that box for now is even. That's good. We've already back tested the 15-minute. We back tested the 30-minute 10 SMA. I mean, arguably, what would be next is kind of into that box there. We're starting to get some green on the volume for the market, S&P for the market, NASDAQ, NYSE. So a couple more things turned back to bullish there, too, in that bottom. Oh, yeah, by the way, since we kind of like did this little like double bottom bounce sort of jam, you're going to anchor to this low. And now your micro pullback targets are here and 1 minute support over-unders are there. So now that's how the market is positioned. Either the market's obviously going to run up, or again, market only can do what? Go up and go down, right? So it's going to go up, right? Here's our next kind of targets up. Going to go down. Here's your target down, right? So when you think of risk to reward, is risk reward good here? So like let's say we buy long. Well, you have the risk of it going all the way down there for maybe going to there. So it's really not that great, right? If you think of risk to reward scenario there. But if you think about it when you were coming into the 30-minute VWAP support over under down here, where we said watch for some support, low, less bearish down here, blah, blah, blah. There's your 30-minute support. Down here is lower risk for a long. Now the long has taken off. You run the risk of pulling back to, like I said, those VWAPs on the low. So right now these are going to be the 1 minute volume weighted average price pullback targets. And also 1 minute hopeful higher low development. So again, right now we're just kind of long the markets in the sense that we're trying to bounce the markets up. We have yet to establish any higher low off this low, even on the 1 minute, right? So this is a bottom, reverse up, and still no higher low develop, which is fine. Again, we're just rallying the market up off of 30 minutes. So though there's no higher low on the 1 minute, this is a higher low attempt on the 30. So let me show you how we developed and got that support. So the same way that we take 1 minute volume weighted average prices of the 1 minute chart is the same thing that we do on dailies, and we pretty much do it on every time frame, but right here. So I'm going to take this VWAP, I'm going to throw it on the low of this 30 minute, and that gives me a 30 minute volume weighted average price right there. So you see how we take this VWAP, look at my cursor, I'm moving it, I stop moving it, I anchor it to that candle. Where's that VWAP come into play? Right where I've now made that yellow line. Go look at a 1 minute. Where's that yellow line? Pretty much the low a day. Missed it by a few pennies there. So this bounce you're seeing on this 1 minute chart, or this bounce that's happening on the current day session, for me would be categorized as a 30 minute. So I'll just do 30 min VWAP HL, higher low, L, location. You don't know that it's going to higher low for sure, but you just know it's a 30-minute VWAP zone. They could likely hold a higher low. So it's a VWAP higher low location, higher low potential area, etc. So this bounce right here is simply just what I would say is the continuation of that 30-minute chart trying to develop its higher low by using previous days or previous sessions 30-minute chart volume weighted average price. Oh man. Oh. So, how's everyone doing today? You guys doing good? You have a good weekend? It's been beautiful here in Michigan. It's October 6th? It was 80, like almost 90 degrees yesterday. It's going to get up to 83 today here in October, which is insane. I am not complaining though. I love it. I'll take it. Alright, so like we said before, guys, we're a little less bearish as we're coming into that 30-minute volume weighted average price low. Another reason why we're a little less bearish as we're coming into there, A, because we know it's a potential support area, and B, as we're coming down, you could see that the FANG and the MAG 7 had already been moving positive. Some of the S&P 500 issues started to bounce and turn their MACD positive. The volume of the market started to increase. The NASDAQ 100, the NASDAQ started to bounce a little bit. The NASDAQ 100 started to bounce a bit, and the NYSE started to bounce a bit. So, doing good and had a good week. And good to hear, Rico. Good to hear, brother. Happy. That's good news. Yeah, so pretty much as the market trades down into an identified potential support area, we look behind the curtains of the stock market. So, again, it's kind of like using an x-ray machine, right? We have support, location. Is it going to be a good support? We don't know. As the market starts trading down near that support, we get our x-ray machine and we start to look at the market, and we look at the advancing declining issues of the S&P 500, New York Stock Exchange, NASDAQ 100, and the NASDAQ. And then we look at a combined ticker of all the major market cap stocks: Netflix, Tesla, Facebook, Amazon, AMD, etc. All right. So as the market trades into a potential support, we use our x-ray machines and we look into the stock market at every single market it has, all of its internal organs, and we say, as we're coming into a potential support, is the market starting to get bought across all of the major markets? And yes, in fact, it was. Not crazy, but it was. So what's likely to happen? Likely to bounce. Likely to stop selling off. How long does that last? Again, we don't know. We don't control that. We just read what's going on. And what's going on is markets are bouncing right as we near in kind of a support level. So, what is the main narrative, though? What's the main narrative? Has anyone forgot the main? That's why we always make sure to say the main narrative on the day, right? What's the main narrative? Oh, the main narrative is the stock market is in a swing long, macro long environment, and it has been. And it started at the vertical line and or this little party face I'm going to add. That's where the long bias trading environment swing market has started. We will flip back bearish when below. But Connor, you were telling us it was bearish all morning. Yes, it was bearish all morning, but it was not bearish in the sense that the market is transitioning to swing bearish, right? So there's intraday bearish and macro bearish. Right now, markets are macro long, and, well, now they're intraday bounds, but, So main narrative is stock market is still positive. Yeah, the futures on Thinkorswim are huge, huge letdown. But anyways, so UPRO, that's a 3 times leverage ETF. So I trade that for the SPY. So whenever the SPY goes positive, I'm usually going to be getting long UPRO, because that's a 3 times leverage ETF. So it's 3x the return of the market. Now, Would you make more with futures in that situation? Like, yes, right? Would you make more with, swinging options? Yes, obviously those carry more risk, blah, blah, blah. We all know the game, right? Same thing with the 3 times leverage ETF. It's 3x the return, 3x the loss, obviously. But that being said, it's UPRO is far safer than options or futures in that regard. Nonetheless, UPRO, TQQ, SQQ, those are all like inverse ETFs of the market, but that's pretty much it. I'm looking at 3x leverage ETFs to trade whether bullish or bearish the markets as they transition and flip. And so, and another reason why I also like those is because, again, if, for example, what you're trading here, what we're looking at is a shorter term SMA trend following system on the market to keep us in the right direction, bullish and or neutral, bullish, neutral, bullish, right? So we can either, avoid most of the drops in the market and then participate hopefully on most of the longs, or we could participate on most of the longs in the market, try to be aggressive and also participate short. But if we were to capitalize on most of the longs on this 30-minute system with a 3 times leverage ETF, then by the end of the year, we should surely beat the returns of the market. Because, again, if, say, the market's going to return 10% this year, and I've traded up a 3 times leverage position 7 times, getting 2% each way, that's 14%. Therefore, I would beat the returns of the market. So the objective is essentially to use a shorter term SMA trend system on the S&P 500 that will allow you to capitalize on more trading opportunities. And then while putting a 3 times leverage ETF on top of that, you should be able to outpace the stock market in that regard. Let me rephrase that. You will 100% outpace the returns of the stock market if you traded this system efficiently. Trading it efficiently is a different story. Now, being on the right side of the trend, you 100% will be. How you trade that trend is all up to you. It's your own psychology, whatever, right? At the end of the day, the system is not wrong. If anyone's wrong, it's you. Again, this system will be here for the end of eternity. Until, again, we blow ourselves up. Or the Messiah comes, really. So, that being said, this will be here indefinitely. The goal is to hopefully beat the returns of the market. You can do that by, A, trading the SPY, right? So, I mean, you could probably, it might be harder. It would definitely be harder to beat the returns of the market by just buying SPY, but if you buy the SPY here, you get 1 or 2%, you avoid that drop, and then you get another 5%, you avoid that drop. So the objective is by using this system, you can pretty much avoid the drops in the market, but then participate on most of the long in the market, right? So you avoid your drawdowns a lot of the times. So that's the benefit. So if you use a 3 times leverage ETF, I mean, for example, we can just do some we'll do simple math here. So this buy, and we'll do perfects, which are never going to be perfect, but we'll do extreme. So this would be, you got long perfectly at trend, sold perfectly at high, which we know won't happen. Oh, that's not a measuring tool, sorry. I'm going to go to the SPY. I'm going to go to TOS for this one. So we're just gonna do like this past few buy signals, and we'll see. Oh, I don't need to go back 90 days, but whatever, that's fine. All right, so this last buy signal here, this one essentially returned from tippy top. So the tippy top there, that was 2.87%. So with the UPRO, that would be 4. You're almost at 6%. So what got you 3% in the market get you 6%. And then, but you know, that's probably not going to happen, to be honest. But either way, so that'd be 6%. This is arguably another, so it'd be 6. You'd be at like 10% with UPRO. And then here you'd be, that's 2, so it'd be 4. So you'd be about 14%. So with these last 3 buy signals in the market, from perfect entry to perfect tippy top, would be a 14% return on your account, or the market, or well, 14% return maximum. And that would be using a 3 times leverage ETF. While I think the market might be up like 12% this year. I forget. Maybe they're at 15%. I don't know. Let's see. So right now the market is up 13% year to date. So market's up 13% year to date, and that was over the course of 31 days. So over the course of 31 days with UPRO, perfect bottom or perfect entry, perfect top, you'd make 14%. So in 30 days with 3 perfect trades, you'd beat the returns of the stock market for the entire year. Well, not really, because it's only 13%. You'd be about matching the gains of the market. Now, are you going to trade it perfect? No, right? So that's that. Now, even still, even if you didn't trade it perfect, even if you just traded from, essentially 50 SMA to 50 SMA break, so you have great entry, but you stop out at 50 SMA, that would be 2.46%. So that's 5% there. Entry to there, that would be 0.81, so 1.6, so you're at 6.6. And then from here, and we haven't even broken down yet, so arguably you'd be at 1.3, so that's 2, and that'd be 2.66 on top of 6.66, so that's 8 and 6.6 and 6.6, so that's 9.2. Yeah. So you have a 9.2% return in 31 days if you followed entry at 50, exit at 50. So not trying to sell the top, but literally just riding the entire wave until it breaks the 50 and then you close. You'd be at about a 9% return. All right. So you'd only be 4% off the returns of the market if you fully leveraged your account on every position of the system. Now, granted, if you were fully, again, think about it, if you were fully invested in the market, now you might be like, well, I can't put my entire account on every move. Well, putting your, and I don't necessarily do that either, but I'm saying if you put your entire account on this S&P position, it would be the same thing as being fully invested. So that's another thing you have to understand. It's okay to, in theory, it's okay to do that in the sense because being fully invested in the market would be the same thing as being fully invested in the market. So if you're thinking about it in terms of a trade, right, you just be buying it, that would be it. I'm fully invested in the S&P 500. All right. But granted, I still wouldn't recommend putting full positions because, it's kind of risky in that regard. Because if you get it wrong, then obviously you're going to get hit. But then again, if you were going to be fully invested in the stock market indefinitely, then your money's just going to go up and down regardless of what the market does, right? So anyways, do it as you please. But then again, that's why if you use 3 times leverage ETF, you can get some extra juice there. So on and so forth. $10.30. Yippee. Yay. Again, guys, we're just bouncing the market. Market's in a buy signal. Market is not a macro bearish environment. We were just intraday bearish, as that's what the market told us to do. Now we're just bouncing the market because that's what the market told us to do. And I haven't thought of any other new plans. Well, my first thoughts right now is like, well, where's this bounce going to go to? How far is it going to go? Well, naturally, I would maybe even think back to the top down 30 here. So let's see where this comes in. So my first thoughts are maybe this market bounces all the way back up to the price of 671.31 because that's where the 30-minute volume weighted average price is at. So sometimes we will do a nice 30-minute to 30-minute. So kind of how we came into the 30-minute support down here, right? So let me just redo that. So how this is the 30-minute VWAP down here, right about there. This would be the 30-minute VWAP on the high, right? So if in the event the market, right, were to basically bounce from here to here, that would be a successful 30-minute VWAP to 30-minute VWAP move. Now, that is not my first thoughts when we bounce that market. My first thoughts are always, what's the easiest thing to retrace? Easiest thing to retrace is always going to be your smaller time frames because they're not going to take as long, right? So yeah, first thoughts were not 30-minute VWAP, but I'm starting to think we might want that. We'll see. Obviously, the closer you get, the more that becomes an option, if you will. So, nonetheless, yeah, markets are just kind of bouncing for the moment. I don't think we've retraced the bottom up 1 minute stuff, so that's in the back of my mind too. We have yet to do that, so probably going to need to do that. But I'll put this on real quick. I guess we did. Yeah, right there. So I just wasn't streaming it or having it on the screen. But we already talked about this, right? Anchor the bottom up, and then you're going to look for a pullback into those, and then higher low development off of them. And that's where you got it right there on that tag. Right there, that candle. That was your market moves up. Market pulls back to test volume weighted average price off low. There's your pullback, and then there's your higher low. All right. And then obviously every dip in between was the same thing, right? So then if we anchor the volume weighted average price to this low, where's the next bounce? Right there. So then your next bounce on your micro scalpable entry, if you will, would be right there on that candle and that low, all right? Where's your next one? Take a VWAP, anchor to this candle, and it's going to be there. There's your next one, right there. Take a VWAP, anchor it to that low. Where's your next one? Going to be the current candle, essentially, which should be on this green one right there. That'll be there. All right, so that's, and where's the bottom of this green candle? Right there. So that is how you make higher lows in the market. That's how you make the chart, right? We're teaching you ways that chart formation is developed. So when you talk about people controlling markets or the way they're going to paint the market, right? People talk about that, you know, oh, the market will paint a pattern to get people to do things, which maybe that's true. But we're showing you how we use volume weighted average prices to predict where the future pullback locations are going to be and then where we look to bounce those locations. So this entire, everything you're seeing, this choppy grind up, someone's probably like, oh my gosh, this is so choppy, it's so bad, which it's not great, but we're showing you exactly how we're making those higher lows this entire way up. Right, so while someone's like, oh my gosh, it's just back and forth, back and forth, back and forth, because they're over here trying to buy the high and get a breakout, we're like, well, this is the last low, so that means the VWAP's there, so that's where we would look to be long again, right? So while someone's trying to break the market, we're like, well, that's support down there, right? So it makes perfect sense, but for some, they would be like, damn, this thing's terrible, which, I mean, it's not great as far as the action, but everything makes perfect sense, not like it's confusing. On that note, I think I'm going to go run and get maybe a coffee. Oh, sorry, I'm back here. Just had to get, excuse me, coffee. Whoa, that was hot. Love a good burnt tongue in the morning. Nothing better. Anyways, Bitcoin, how crazy? 125K. That's good. Hopefully that keeps going up for forever. Yay. Yippee. Oahu. Oh, man. Oh yeah, by the way, Bitcoin, our pullback target for Bitcoin has updated. It is now this box. So again, everything you guys have seen like 16 million times a day with putting boxes on the screen and VWAPs, that's our target right there. So when I say that's our target, that means that we just expect that the price at some point is going to trade back to our volume weighted average price, because that's just what the markets like to do. So this will be our pullback target. Our pullback target are the volume weighted average prices that are untested from this long move up. So when the market starts to pull back and it starts to do whatever, when I say do whatever, it means pull back, really. However you want to correct, pull back, sell down, that is most likely going to be our target. So essentially, we don't care how high the market goes in the meantime. Honestly, we want it to go as high as possible. But we just know, based off of what has previously happened in the stock market, there are desirable prices on the downside for pullbacks too. And that would be everything that got bought up here. Pull it back. Because everyone is just so high on life right now. They're like, oh my gosh, Bitcoin's the greatest thing ever. It just goes up, right? Straight pump, 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 pump. Yeah, pump, 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 pump until we go drop, 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 right? So everyone's excited. Everyone's happy. It's going up. I'm happy too. But there is no higher low in that chart on that daily at all. So that's going to happen for sure. At some point, obviously. It's not the famous saying. It's not if, or wait. Yeah, it's not if, but when. It's not if it's going to happen, because it will. It's when it's going to happen. That's the question. And we'll be here for it. You'll see it. When it's happening, I'm sure the news will be there. Be like, oh my gosh, all of a sudden Bitcoin's pulling back. What's going on? Alrighty. Alright, yeah, I'm just taking a second, going through some other... Sorry, some penny stocks here. Yeah, I kind of dropped the ball on myself on ONMD. It's not that it was a bad one. I didn't recognize it early enough. ONMD is not bad. This was a pretty good one. So here's another thing. The reason I wasn't crazy about it, which hindsight 2020 is always so clear, but I should have been a little more optimistic on this one, because it had obviously these highs that Obviously, price broke out today, so that's good. But mainly, if we look at the uptrend, downtrend on it, right? So we know that this was in an uptrend here, and then back into an uptrend here, and then last night, or not last night, but Friday, ONMD on Friday. Oh, excuse me. Essentially back tested 30-minute trend support over under held, and then what was I looking at? 4 hour. Where am I? Oh, I changed it. That's why. And if we look at or sorry, no, that's other way around. That was the 4 hour. My apologies. And then the 30-minute just flipped positive into Friday. So when we go in today, I mean, it really was kind of breaking out. I just didn't really recognize it patterning well enough. But anyways. Oh, that's another one that was good today. That just SPRB. Or wait, did I see this one? I don't know if I did or didn't. Yeah, it wasn't on one of my things today. Kind of missed this one too. All right, we'll get off of Bitcoin because I know everyone's kind of like, well, that doesn't really matter for me right now. So we'll go back over to the SPY and see what's going on. Nothing crazy. Just doing the old bouncer Magoo. Still looks pretty decent. I want real love, baby. So obviously you guys know this was like a little miniature top in here. So if you take a VWAP here, you're going to see the market try to remain below. So we did a 1 minute lower high off volume weighted average price. That 1 minute VWAP is now breaking. So 1 minute short sellers are now getting taken out, stopped out. So I'll show you right there. You guys can see it clear as day. Bing, bang, boom, chicken wing. Go get off my chart. There we go. Yeah, I'll take this one off. All right, so right there. So you can see this was your high. So market goes down. You anchor here. That's your 1 minute lower high location. Up, lower high, down. Can't break low. Pushed up, stopped out. But that is how you create the 1 minute lower high. Put in a top, break some structure down, anchor VWAP, and pop up. And there's your lower high. As we always say, folks, it's getting to that time, 11 o'clock. What happens then? The market slows down. It gets kind of boring. Most of your volatility takes place. So now you're just kind of sitting in that. I mean, that's not entirely true, but it just generally tends to. It seems it slows down. It's just what happens. So, that's that. So as far as anything cool happening, I can't say that's gonna take place, but you never know. Yep, not bad, not bad. Again, same thing as it's always been. Last little top there, pulls down, anchor VWAP, lower high, 1 minute right there. Same story as always. New VWAP. Again, just VWAP off this previous low. You're making your lower lows right there. Pretty straightforward. Bing, bang, boom. Ding, ding, ding. So from here to about there. Yep, some pretty basic stuff there, just VWAP to VWAP stuff. Alright, just for some funsies, we'll see what's kind of moving here today. So it looks like biggest mover, technology sector today, followed by energy, followed by communications. Wait. No. Yes. So we'll jump into technology, see what the biggest guys are. So AMD, well, yeah, obviously AMD with that huge news today. I haven't even seen how AMD traded since then, but let's just, for funsies, let's go look. AMD, big gap up, sold down at the open, no surprise, bunch of profit take, cool. Thing's super extended from its uptrend, obviously. So, as you guys can see, look at, so like, for example, right? So take AMD, and we heard it. I don't even know what the news is. I didn't even read it, but I know there was some crazy stuff with AMD. But whatever it was, look at where it starts. Right, the 50 SMA on the 30-minute. So, ready? AMD got this crazy news. The stock's amazing. Whatever, some deal. Where's the... Look at that. Look it. Look it. Look it. Just look it. Just look it. Everybody looky looky. Looky looky. So, you had no idea AMD would come out with news today, but you said you'd be long biased the stock. Well, you're always long biased the stock when price recovers 30-minute open, high, low, close. The SMA. Which is that yellow line. So, ready? So, this morning, AMD pops over 50 SMA, trades, and boom. And there you go. There's your massive breakout, accompanied by a bunch of news, whatever. So you can see how the market's perfectly situated AMD so that it was right on the uptrend start level going into this big news announcement. So that was pretty cool. But yeah, so AMD essentially went into an uptrend. You could have been long AMD stock this morning if you have the broker to trade early, which would be like Webull or Lightspeed or something like that, or what have you. But, you know, you could have been participating long this stock this morning in the 4 a.m., 5:30 a.m. session, 6, if you were up as the market was creeping over the 50 SMA. Stop below 50, and then he would have got in part of that. Anyways, most people wouldn't, and most people don't, but there you go. So that was interesting. All right, what was the next one? MPWR. Looks like it's going to be the same thing. We'll see. Yep. So MPWR, same jam. Last night they took the market down to support, and then looks like in the early morning sessions they blew it up. So yeah, they blew it up. Well, 7 morning, 7:30 into 8, and stays into the long. SMCI, arguably the same. No, but they came close. So a couple big movers. All right, now we're down to there. Gotten pretty close to completing that 30-minute volume. Well, I mean, I wouldn't say pretty close. I mean, you still got 40 cents. Well, 35 cents or so, give or take. All right, 30-minute VWAP complete. So this is also something that I do in my mind and also used to do. I just kind of did it now, but basically there's something I always look for is 30-minute VWAP to 30-minute VWAP. So this would be market sold down into 30-minute VWAP, and the 30-minute VWAP created from today's move would be here. So this would be a 30-minute VWAP to 30-minute VWAP trade. And anyways, so I would measure off, you know, when I first learned this risk to reward and strategy of this profitability. What am I saying? The risk reward profile of this particular strategy. So the reason that you see two boxes here is because a lot of times you'll see the 30-minute VWAP hold resistance. So this would be, you know, arguably the start of resistance now. And if this resistance fails, then a lot of times we'll go back to the high a day. So arguably, if the market wants to go to the high a day, which would be here, this will not have resistance, right? But arguably, this is a... I'm just going to stop talking. But 30-minute VWAP target hit. No, this can be resistance. It's also 11:00. It's 11:06. Kind of an awkward time, but we'll see. Yeah, I'll take a look, Petey. I'll take a look. Thank you for asking me to do something. I've just been sitting here thinking about, I don't know, a bunch of random things, so it's nice to have some interaction there. PLTR. Oh, you know what, before I do that, hold on. I'm going to go back to the SPY. So, yeah, I want to explain this a little more. So, a lot of times, not a lot of times, but enough, you know, in this case, you may see something like this, a 30-minute VWAP trade to 30-minute VWAP trade. And if you can predict that, A, the 30-minute VWAP holds support, and then the market does, in fact, move to the next 30-minute VWAP above, you can essentially measure the market like that. Now, you know, in this instance, right, the 30-minute VWAP was actually a little lower. So the 30-minute VWAP is really like at this low, which it actually never hit, so it's not entirely true. But the point being is, if you were to get long at the 30-minute VWAP, your entry's here. All right. No, it's not like, come on, damn it. Whatever. So your entry's like really the low, but we'll just put it on top of like this green right there. So the point here is that, did you know the 30-minute VWAP would hold support indefinitely? No, but obviously the point being, taking a chance there, you get long, you could set your stop to wherever you want. You could have been targeting the 30-minute VWAP, so you'd have a move to the upside that is essentially, if you want to do a 1 to 2 move, this is how you could have been set up. So if you were going for a 30-minute VWAP to 30-minute VWAP trade, your risk to reward profile for a 1 to 2 would be there. All right. So when the 30-minute VWAP was entered, you could, I'm teaching you a strategy right now is what I'm doing. You could be long into the 30-minute with the best case scenario hopes that you go back to high a day, but you're going to be aiming for the next 30-minute VWAP, which is here. All right. And that would be like your best case scenario long. All right. Hindsight 2020, how much risk did you actually experience? So though you may have set up for a 1 to 2 and gave yourself a wider stop, what risk did you actually experience from, let's just say, that green candle to the low of this move? You experienced a 16 to 4 risk to reward, actually. All right. So all said and done, we've experienced a 16 or risk to reward of actually 18, I think. Yeah. Yeah, an 18, a 1 to 18, if you will. So that's not bad. So anyways, we just hit 30-minute VWAP. I'll show you what it looks like. Sometimes, you know, this strategy works good, sometimes not. I've seen it come and go at times. Clearly it worked today, which is cool. But, yeah, I'll delete all this off and I'll show you real quick. If it stops working, it's probably because I've shared it too many times. Or it's just going through its cycle of, you know. But that does happen. You know, you share some things and some things kind of don't work as well. And then they come back. And anyways. Strategies are always kind of coming and going. So there you have it. So there's taken the previous day. 30-minute. So again, this would be, if you just think about the chart, right? So like here's a higher low, and then it's up and then down, and that's a low point, and that's a high point, that's a low point, etc. That's kind of the way you think about it. But anyways, so that's that, and then we would take a VWAP, we throw it here, and we go boom. So I'm just taking the current day's high on the 30-minute and just throwing a VWAP on it, and then that would be it. So now it's, so if the 30-minute wanted to hold resistance and arguably stay down, this is where it would need to do so. Now the time is 11:10, so even if it wanted to hold resistance, could very well be hard to turn that candle red. So it might need the next 30-minute. So too, even if this wanted to kind of turn red here, you might still need a whole, 20, well, what, 11, so what is that, 29 minutes, or not 29 minutes, you need 19 minutes. You need 19 more minutes of trading up here to see the next 30-minute candle, which may flip red. I'm getting way into the weeds of it. I don't want to speak like that, but just in general. So that was our ultimately 30-minute backup target there from the low, doing a 30-minute to 30-minute. But even still, so you see how we're anchored to the high here and we're back testing the 30-minute? We did the same thing, but on the 1 minute too. So if we look at the 1 minute, look at the 1 minute anchor here at today's high. Where was our first back test after this low? Arguably up to that 1 minute. Now we're just doing the same thing on the 30-minute, right? So even though this was a bottom and it bounced, it's not that you're always going for the 30-minute. It's just, yeah, I could do a 30-minute to a 30-minute. But one of the easier long targets, rather than going from the 30-minute to the 30-minute, would be 30-minute to a 1 minute. That's more obtainable. And that's normally what we're looking for, is something smaller, like bouncing a 30-minute, going to our most recent 1 minutes, taking some profit, and then you can let something ride and try to get a bigger trade out of it. That's the objective there. But yeah, I'll go to PLTR now. So PLTR. PLTR, resistance, rejection. So ideally, when the market opened, so when the market opened today on PLTR, I pretty much would have read it like this. So this was the open right there, or well, actually the open was like right there. And then the 50 SMA was here. So yeah, for me with PLTR, when I woke up today, I mean, I really would read this two ways, which is once you opened, you pretty much had two options on the stock, right? From the open, you're either, because again, stocks can only go two ways, up and down. And the level on the bottom is the blue one, or green one. That's the open. This is the 50 SMA. So I would have read this two ways, which is stocks can only go up and they can only go down. So knowing that the 50 SMA controls bullish, bearish, etc., that would mean since the market on PLTR today at the open, the green line starting at the open is below the 50 SMA, it's got two options. Well, there's three options, but we only think the third. Anyways, so it would be either the market is going to go what? Down, or it's going to go where? Up. Why? Because it can only do two things, go up and down. All right. And now, so now we've determined something we always know. Stocks only go up and they only go down. All right. Now let's look, where's the trend? The trend is the 50 SMA. And that trend dictates up and it dictates down. So since we are below it, right, we're below the 50 SMA, there's only two options. Either what? The market stays in a downtrend, or it goes into an uptrend, right? So it can only do two things: stay in a downtrend or go in an uptrend, all right? But it can also do one other thing, is it can backtest within the downtrend, all right? Which means go up in the downtrend. So we know stocks can only go up and down, and they can only go from downtrend to uptrend. And the only other kind of facade in there is that you can also do a back test, which means once you enter a downtrend, you can either stay down, but you can also go up to back test the downtrend over under. All right.
So this morning when we wake up and we see that the level that controls uptrend and downtrend is here, and we see the price of PLTR is here, and we also know it can only go down and can only go up, what are the two most likely things it's going to do? Well, the two most likely things it's going to do is either go down or go up. And then from there, I'd say, well, looking at where the price is at, we're not far from the 50 SMA, so it's also very likely we're just going to go all the way back up to test what? The breakdown. So that was your breakdown. There's no back test, so there's your back test of your breakdown. So that was today the back test. Well, that might kind of be wrong. I don't know for sure because the SMA changes, but realistically, that's what happened. Let's see. Yeah, so if you look at the action from yesterday, you what? You broke down, and then you never back tested, and today, there's your back test, right? So the market went into a downtrend yesterday, and then it popped all the way back up to test the downtrend over under, and it remained down. So yeah, like I said, when I go into this morning and I looked at PLTR, I would say to myself, stock can go up and down. What's the most likely two things it's going to do? Go up and down. Where's it going to go up to? It will most likely go up to 50 SMA to do the back test. And that would be the same exact strategy that we use to predict the movement of the VIX for 5 days in a row. The back test, right? So that's what I would say there with PLTR. So if you want to be long biased PLTR, then you're going to have to wait for it to obviously get back over that 30-minute, right? If you wanted to be bearish PLTR, then you arguably should have been doing it at that high and or that back test there, right? Because that would be you trying to keep PLTR into a downtrend, right? So if you wanted to be bearish PLTR, you should have been bearish yesterday as is breaking down to the 30-minute. And then if you wanted to be re-bearish PLTR, then arguably you should be doing it here on this high and or that lower high. And then if you want to be bullish PLTR, it will be when the market establishes above or here or whenever the algos want it. That's what I was going to say too, is you don't control the market. Computers do, right? So yesterday, look at market came down to PLTR, broke it down and just went, right? Again, below the levels bearish, the algorithms want it bearish, they made it bearish. That's it. Again, you don't actually control whether or not something's going to have a good move or not. Computers do, but the level that they use to shift the market that way is always a 50 SMA. It's just whether or not the computers want it to kind of have that good move or not. But the start point, always the same, 50 SMA. And I explained it the other day, or maybe it was last week. I explained this, and I thought it was a good way of explaining it. The 50 SMA is like the start line of a race. You always know exactly where the start line is going to be, right? And you show up to the race. You just don't know when, the referee or the person who, blows the gun or fires the gun to start the race. You just don't know when they're going to do that, right? So you don't know when the system, right? System being the market, system being the game, right? The computers, the algorithms, etc. You don't know when they're going to fire, the horn and start the race at the 50 SMA, but you know where the race will start, right? You have the directions, you know how to get there, but it's when they're going to blow it off, you don't know. But you're in the right spot now. So you're no longer looking in the wrong places. You're always looking in the right place, right? That's the beauty of it. Is you're no longer, seeking. You've already found. Now it's about waiting and then hopefully joining in on the right race when they start. Same thing with same thing with SPX, right? We go back, look at SPX, us here on the stream, the 5 of us here right now, 6 of us maybe, we've all been what? We've all been long biased the market since last Friday, right? So that's 1 week now. We've been on, so for 1 entire week now, every single day, we've been on the correct side of the market. Every single day. Because we are macro long biased the market right now. We are swing long. We are bullish market participants, bullish market analyzers, technical analysts. We are bullish market news outlet. We are bullish market news articles right now. Everything about the Boiler Room Network, so we'll just consider we're a news station on YouTube. Everything about our network suggests you should have been and be long biased since last Friday. And we've been correct for an entire week. Why? Because we just simply follow the system, which is if market is above said SMA, market's positive. We don't do anything but listen to what the market says. That's it. Okay, we're not looking at Jerome Powell
and the color of his tie. We're not looking at what some person on CNBC is saying because AMD had a super magnificent deal. No. What does the system say? Is it positive or is it negative? If it's positive, we stay positive. If it's negative, we just say it's negative, right? So that's all we do. We just follow what the system says. So our news organization, the Boiler Room Network, which is just one dude sweatpants in his house, has kept you on the right side of the market for an entire week. And you have too yourself, because this is all you. You just come here and I just show you one thing, and now you've learned it, and now you do the same thing, right? So that's all it is. So you yourself have been on the right side of the market for an entire week from one SMA, and that's it. Zero noise. No noise. Exactly, PD. Yep, 100% correct. I don't know if you said that after I showed it to you, or if you said it while, either way, but that's 100% correct. There was, actually, you probably said that either way. But yeah, that's correct. Yeah, it was a breakdown and a back test today. So you can see in real time how that SMA is being used to trade the PLTR market, right? You can see that. All right, there you go. I mean, it's... So yeah, I mean, for all of you guys too, there besides PD, I mean, same thing. This is PLTR. The market literally works on the same thing. Here's a 30-minute breakdown. So look at when was the market bullish? The market flipped to bullish here, got over the SMA, they got control, and there you go. There's up. Then for whatever reason, it got weakness and it came down. It broke down the 50 SMA, and then what? There's your breakdown. And then here is your back test. And if it gets over the 50 SMA, then you go up, etc. So that's how the market flips from short term, and it really is short term. You know, it's not like there's, you know, could be days and minutes and so on and so forth. And that's how computers move markets back and forth, right? That's why one day you wake up, your stock's up. One day you wake up, you're like, oh my gosh, what happened? The stock's down. It's just computers and algorithms flipping stuff from bullish to bearish all day. Well, really every other day or every other week or whatnot. Bitcoin 125,000. Yes. Oh, it feels so good. It feels so good. Especially when you buy it 3 times a week, every week, for a long time. Yeah, so I'm just gonna call you Tiger. I think, yeah, Tiger. Or I'll call you T Tiger. Whatever, you know. But the reason you see me using those 2 time frames or extended hour, the only reason you see me go and flip charts really from extended to regular is because I want to know where the 50 SMA from the regular trading hours chart is at when plotted into a pre-market or after hours time frame. Because again, the 50 SMA that we're looking for, that price point, it's the price that we want. That comes from the regular trading hours chart, not pre-market charts. But that level is still very, very important to be used in pre-market charts. You see what I'm saying? So in the morning, early morning, during pre-market, I'm going to go and look at a regular trading hours chart. Where's the 50 SMA? And then I'm going to plot it so that when I go and look at a pre-market chart, I know where the over-under is at, right? Because we will use that regular trading hours 50 SMA as a tradable price point even during the pre-market sessions, right? But we need to go first get that price level from a regular trading hours chart to know it, because it doesn't come from a pre-market. It comes from a regular trading hours. And then we take that regular trading hours price level and then use it during the pre-markets, right? And then that's pretty much it. Then once the market opens, and you don't really, it's not that you don't need pre-market stuff, it's just it goes both ways. In order to get it, you got to go look at a regular trading hours chart, and then you can use it during a pre-market. So we use both time frames, and we look at both time frames, But the key level that dictates everything comes from that 30-minute regular trading hours. So hopefully that clears that up for you, and hopefully that makes sense. But yeah, that's why I'm always flipping charts like that. And also for the teaching purposes of it. Because again, yeah, like a lot of things happen during the pre-market session that are based around that 30-minute 50 SMA. So you always see me go into the chart, find it, then go back to the pre-market, because I'm trying to teach you guys how we take it from one from one time frame and one chart, and then use that during a pre-market to essentially move price the way we want in a pre-market. And that's the beauty of it too, is like, for example, for someone who only ever learned pre-market trading and after hours and never even doesn't even know just regular trading hours charts, then they will never in their lifetime ever find that 50 SMA and that price point, right? So if somebody never learns about regular trading hours charts and they're always looking at a pre-market chart only, then they'll never in their lifetime ever know of that 50 SMA and that price point, and they'll never have a clue how we flip the market from bullish to bearish in real time. So one morning in the pre-market session, they see their stock explode. They go, oh my gosh, this is great. When in reality, all we did was just move it into an uptrend, right? And they're going to go look at the news and go, oh, well, the news was positive, and so now the market's good. So maybe that was it, right? So now they're going to be looking for positive news on their stock for however long, and then one day they're going to have positive news on their stock, and their stock's going to be tanking, and they're like, I don't understand. It's going to be because we just put it into a downtrend. So that's what I was getting at, is we use those levels in the pre-market to dictate if we're going to be bearish, we're going to be bullish. So we will take a regular trading hours level, we'll use in the pre-market, we'll flip it positive, flip it negative, and move the markets how we want. And all that pre-market action had not necessarily nothing, but it had all to do with the regular trading hours chart and not the pre-market. You know what I mean? So it's the information that someone may never get and may never learn and won't realize how we move markets like that. Yeah. So that's the crazy thing. Oh, Bitcoin. But anyways, I would like to take this second to thank you guys all for tuning in with me every day. Obviously, if you guys weren't even here, then I probably, well, I mean, I would obviously just be working in a private group, but probably would not obviously be streaming. But I do enjoy all of this, and I appreciate you guys hanging out and spending some time with me each day. What was I getting? Oh, I was getting ready to look at my Bitcoin. Thanks, T Tiger. Oh yeah. Oh yeah. Okay, what is going on in the world? Anything good? Again, nothing new here. We're just trading up into the 30-minute volume weighted average price as we suggested. Oh, and it's 11:31. So that's a new 30-minute candle. So remember, as we said, if the markets were going to hold resistance here, a lot of times it may need it till like the next 30-minute candle. So we just kind of did that. 1 second. So this is important. So this would be right there, Alt V. So where I put that vertical line is right now is where the new 30-minute candle is starting. So we just basically had the market run up into 30-minute volume weighted average price. And now you have the the new 30-minute candle there. So this is, start of a new 30-minute candle. The market's been trading up into this VWAP area for, say, 30 minutes now. Has not had any resistance. We're now into the new candle. If this new candle can't cause resistance, that's generally a decent sign we're going to move higher. But nonetheless, that's that. Market internals aren't like, super bearish or anything like that. No. Pretty basic stuff, I guess, at the end of the day. So, we'll probably 11:30. We've been on for what? How long has the stream been going on now? 2 hours and 30 minutes. Can't really say there's a whole lot more to do here. But like I said, this is kind of the completion of that long move today into the 30-minute VWAP. Now it's got to establish above it, and not even that. It's just a VWAP zone we try to get the market to. But yeah, I think we'll end the stream there. 2 hours and 30 minutes today. Kept everybody on the right side of the market. Bearish to start the morning, then long bias on the bounce. Targetable all the way up to the 30-minute VWAP. 30-minute VWAP for support. So far we have kept you on the swing long, kept you bearish in the morning, all the way down to the 30-minute VWAP, then suggested look for support, and then to look to take the market as long as a 30-minute VWAP on the upside. So all that is, so that's a pretty good day. Can't deny it. Hope you guys have a good day, and I'll catch you back tomorrow morning.